All right, in the meantime, economists right now are looking at the economy and saying that this can't go on very long. That is, this recovery that seems to know no bounds. By 2020, the view of these economists is that it ends. That will be the year of a recession, and if so, it would represent the longest stretch we've seen in the post-war environment without a slump or a recession or two back-to-back quarters of contraction. The National Association for Business Economists survey analyst Jack Kleinhenz. Jack, very good to have you. What does this mean, Jack? I mean, they're saying by 2020, you could make a case. Well, certainly by then, that's a good possibility. But what are they basing it on?
Well, I think that it's a possibility, and it's the best guess we have that by the end of 2019 or early 2020, that there's a good possibility that we might see the end. Of course, we are beginning the second longest expansion right now as we get into 2018. And actually, I'd like to focus that, the growth rate that we're seeing for 2017 is not a bad pace, certainly at about 2.8% for this year and 2.7% for 2019. So I think we need to recognize that the economy is functioning fairly well.
You could make the argument, too, that things are picking up a little bit. Now, of course, one quarter does not a trend make, and we've seen these spurts before where all of a sudden the employment report had a lot of people, including those of the Atlanta Fed, saying, we could see a 4.8% clip in activity. First of all, do you see that, and does that type of data push this doomsday scenario back a little bit?
Well, I think there is data that in our survey suggests that really could push things back. For instance, our industrial production estimate for 2018 is at 3.8% growth rate, which we haven't seen in some time. And investment in non-residential expenditures in capital X is actually very strong at 5.8%. So that could carry us along. Of course, don't forget that the driver of this economy continues to be the consumer. And we saw, or in our survey, it suggests that we probably have about a 2.6% growth rate in consumer spending in 2018. It's a little bit behind where we saw about 3 months ago, but I think that has to reflect the fact that we had a softer first quarter. But again, I think, as we look at sort of a number of factors and look at some of the data that just came out last week, Neil, for instance, construction spending was up. We had very good the data on retail spending earlier in the month. We think about the data on manufacturing looks fairly good. So I think there's a number of metrics out there that really kind of support the underpinnings of the survey.
Jack, and it's always dangerous for me to say it's different this time because people always regret saying that. But the note on this recovery was maybe given the severe recession that preceded it, it was slow. It was steady. It was respectable. It wasn't gangbusters, though. And because it was such a tepid recovery, it has longer legs. And that the 2020 thing could be off, maybe by years. What do you think?
Yeah, it's very possible. I mean, again, it's a probability function for us. It's our best guess when this could happen. And I think we need to notice in the survey that there are some risks as we look out over the next year and a half. Certainly trade policy is one of them. We see that we're walking up interest rates. Inflation is a little bit higher as we go forward. And so all of these factors are certainly entering into our perception of how the economy is going to perform. But I think, it's not 100% probability, and it's a median estimate of what we think is best expected, and it could be pushed back, as you're saying, Neil. I would argue that that's a good idea to think about it in that fashion.
All right. Thank you very much, Jack. Thank you for taking the time. Jack Kleinhenz, the National Association for Business Economic Survey Analyst, Chief Economist of the National Retail Federation as well. Thank you again, Jack.